Dow Jones dropped like 500 points in the pre-market on that bad CPI data. And if you have been following my videos recently, I've been pointing out that the inflation data has been coming hotter for months now. And when the January reading came out, Powell conveniently said, one reading is a dot, two readings is a line, and three is a trend. Well, this is the fourth reading, so what is it now? Are you seeing a trend? I think today's CPI data was very important because the markets are basically looking for a trend. Is there a trend developing in the inflation? Is the inflation really as sticky as it seems to be? And based on the data, because Fed is driven by data, yes, it does appear like that. And you can see the market reaction this morning. Nasty drop in Dow Jones. I took a bunch of bearish trades this morning. And I feel that this rally is officially over. What can go wrong? Earnings season. So we do have earnings season starting on Friday with the big banks reporting. So, if all the banks, Wells Fargo, Citi, BlackRock, all these financial institutions start reporting rosy earnings and start giving good forward guidance, yes, this rally can reverse. These are the markets. Anything can happen. But if the state of the things remains as it is, this rally is over and a new trend could be starting. And let me switch. This is a 5-minute chart. That's why you are seeing that this candle looking so exaggerated. Let me switch to a 6-month chart. I have made at least 3 or 4 videos where I've used moving averages, and I've been telling you that once the 8-day EMA, which is the blue line, crosses below the pink line, which is the 34-day EMA, that is a sign that a trend is about to change. And this is what is happening today in Dow Jones. Now, if the banks on Friday, they report bad earnings or weak forward guidance, this slide will continue. And that's it. That is the start of a bear trend. And then if you have been waiting patiently to take bearish trades, then this is your moment. You can just start ramping up your whatever bearish trades you take, whether it's a bear call spread, put debit spread, whatever it is. For us to get a correction, we need a secular drop in the market. So this is only happening in Dow Jones right now. If you look at QQQ has just barely, the 8-day EMA has barely crossed below the 21-day. So we need more confirmation, and that will come with Netflix earnings next week. Look at SPY. SPY is just a well-behaved cousin of QQQ. It has a lot of growth stocks in it, but it has many other stocks which are not growth, so it moves slower than Qs. But one thing, on 4th April or 4th April, when we had a massive bearish engulfing candle, that was a bad omen. And this is the size of this candle is huge. And when a bearish engulfing candle happens, if you study candlestick patterns or technical analysis, that is like a precursor to upcoming trend change. And that is exactly what is unfolding in front of us right now. So let's see what happens tomorrow with PPI, and then let's see what banks do on Friday.